កម្មវិធីកិច្ចសន្ទនាកម្ពុជានិងពិភពលោក
Good evening, Excellency, ladies and gentlemen. Welcome once again to Cambodia Global Dialogue or Southeast Asia TV. Tonight, I have the pleasure to have a special guest who happened to be coming to the country to do his work, and I met him on a train and on a special train, and I thought, well, it'd be nice to have him come over to the show and share with us a bit the perspective on what's happening in the world, particularly in the financial sector. This year it's quite interesting because with the election of President Donald Trump, the uncertainty over the protectionism policy, make America great again. Then on Europe side we have Brexit, we have the election in France. I don't know, the rise of China, the One Belt One Road, Japan changing its pacifist constitution to a more militarist. So many things happening, and for sure there'll be clear implication as to the global growth or the slowing down of the economy in the world. But anyway, I want to save this to our expert, and it's Louis Cohen, and he's with Tilney Investment Management Service. Louis, thank you.
Thank you
for coming to the show. And instead of me introducing you, why don't I give you a few minutes?
Okay, thank you very much. Good evening, everybody. My name is Lewis Cohen, and I'm a Director of Investment Management at Tilney Investment Management Services Group based in London, England. My job is looking after the investments of clients around the world. The company itself is a company that holds approximately $26 billion of assets on behalf of clients, predominantly on what we would call a discretionary basis. So we actually manage the funds on clients' behalves. We help them make the decisions and actually deploy their capital for them. The group is based in London, in New Street Square and Fleet Street, but we do have regional offices across the UK. And the reason I'm here currently is because I'm here visiting clients in partnership with our exclusive arrangement with Infinity Financial Services, who are based across Southeast Asia.
Well, Louis, your firm is pretty much all over the world, right?
Yes.
And number one, your local partner that you're investing is Affinity.
That's correct.
It's insurance company. Well, I'm one of the policy holder there, so I have a stake in that. Hopefully, I never have to use it.
Yes.
But anyway, please share with us a bit how you see the global outlook. Yeah.
So, I mean, the global outlook could be taken from various different stages, but I suppose what we need to do is sort of take it back to maybe 2008.
Okay. Financial crisis.
Okay. Exactly. Because up until 2008, as far as we were aware, everything was fine. The banks were all working effectively. Capital was being lent, as you would expect in a normal global economy, and we believed it was being utilised correctly.
Yeah.
As we are aware that wasn't quite the case, and some of the pre-packaged loan products that we thought were shown to be safe and AAA rated, actually underneath that had some unsecured lending and some low quality debt. And as the economy
that started in the US, right?
That was in the US. That's absolutely correct. And that was that packaging of what was called the subprime mortgages, the low value mortgages. So people who were allowed to self-certificate their earnings, were allowed to self-declare their wages, and that was also in the UK. They were packaged up with some better quality debt, the good quality corporate debt, and sold on to investors. As the default started to increase across the US, that all unravelled, and then it was found to be that everything was sort of built on sand, old adage, yes?
Yeah.
So we saw the global financial crisis, we saw the banking sector collapse, and then that culminated in Lehman's going bankrupt in 2009. What kicked off everything is that there was this first range of quantitative easing,
yes.
So money supply. So the Federal Reserve effectively bought bonds from the banks to prop up their balance sheets.
Explain a bit for the benefit of the audience, quantitative easing. We talk a lot about it, but we have no idea. It's QE.
QE. The idea of quantitative easing is to increase money supply into the economy, and that is a transmission mechanism, effectively to buy. Transmission is allow money to flow. Okay. And it's the idea behind it was to bypass the banking system, which was struggling, and get money down. Now, the way that's enacted is to buy debt, bonds from the banks or from corporates, and also the good ones, high quality. What that does is, if you buy your own debt as a government, the price naturally goes up. Yeah. Because you are the buyer, so therefore you're the market, which brings the yield down. Because the yield on a debt, as I'm sure your viewers are aware, is that the higher the price, the lower the yield. If you take the 10-year bond cycle or the 10-year yield, then the lower that becomes, that is where interest rates are normally pegged to. So if you get lower yields, that brings down your interest rates. Yes. And if you bring down your interest rates, then that effectively allows people to reduce their expenditure because their debt becomes cheaper. So that was the premise behind it.
Yes.
It could argue that worked the first time.
So who started? The US?
That was the US, the Federal Reserve.
And did the Bank of England follow suit?
Then the Bank of England followed suit, because it was then realised that there are times in the world where everything is interconnected, and we've had many crises over the however many hundreds of years that we've been
cyclical,
correct? Yes. But sometimes everything is connected, and in 2008, 2009 was the first time that we saw everywhere affected, and also all capital affected. So whether it's equity markets, bond markets, property markets, everything fell.
Why suddenly that? Well, I wouldn't say suddenly, but along the way there's some movement toward that connectiveness, right?
Yes.
And what triggered all that?
It's very hard to sort of pinpoint the actual reason why it was also correlated.
Yes.
I think where I would see it is that because it's a banking system failure, and because it was a interconnected global banking system failure,
you're right.
Everything then is seen to be the same. So if a bank's debt and a bank is seen to be less creditworthy, then you'll have less faith in actual fiat money, paper money, and therefore everybody moved out of all asset classes. And we got to the point where the world thought it was everybody thought the world was going to stop spinning.
Yes.
And so we saw movement out of what we would expect to see normal risk assets into non-risk assets. Yeah. So government debt and gold.
Yeah.
And cash.
Yes.
And of course that puts a big stop on the markets and on the growth.
And after the quantitative easing, what happened? What's the effect of that, and what led to the recovery of this 2008 global financial crisis?
Well, a normalised banking sector crisis takes around about 10 years to wash through. So what do we need to do? We need to. So the banks are the sort of the good and bad of everything.
I like that.
And I'm not here to bash banking, but obviously, you need a banking system to work effectively.
Yes.
But at the same time, if it's not working effectively, then it stymies growth. So the banks needed to recapitalise. They needed to recover any non-performing loans. But to do that, you have to then foreclose. And you have to keep your capital adequacy ratios at the right levels.
Yes.
So on the back of the financial crisis, the banks were asked or told to increase their adequacy ratios.
Okay.
But at the same time, they're expected to lend. So, and you're not going to lend if you've got to increase your capital.
Yes.
You're also, and one of the things that the research team and the investment office have looked at is that if you look at the different structures of banking levels, if you've got that middle tier, which is your sort of loan book, if you want to keep your adequacy and you want to keep your balance sheet strong, then you will recover and foreclose on debt that is easily repayable and is actually going to recover the full amount, as opposed to a company that has, say, less to recover, because that takes money out of your balance sheet as well as the debt. So this was the issue. So the Americans did this faster, and we could argue that the American banking system was fixed much before. The UK banking system is just about fixed. But
is that because at that time this stimulus package, no? that the administration have stepped in and helped save
Well,
too big to fail.
Too big to fail.
Yes.
Well, I think that the issue was that no bank should ever be too big to fail.
Yes.
Which is why Lehman's was allowed to go bankrupt. But at the point, we didn't realise how interconnected everybody was and how much of the debt was being washed around the whole banking system. And that's why we saw the US banks and the UK banks being nationalised and merged as well.
Yeah,
So a lot of mergers and acquisitions throughout the 2009s as banks were put together to strengthen their balance sheets.
Yeah.
You may not have seen it over here, but in the UK there was a run on one of our banks, Northern Rock.
Yes,
So
Northern Rock. You're
yes.
right. I recall.
Yeah,
It's all over BBC.
so nobody wants to
Yeah.
see lines of people who can't access their money, and that's why you saw extreme measures to protect.
Well, he
the
brought
banks.
Iceland.
Iceland came down. That's right, and that had a knock-on effect because that was the first time. Not the first time. That's probably wrong, but the first time in a long time that individuals realised that their money was not safe in a bank.
In a bank. Psychologically, it's devastating.
It is absolutely. And then we saw Iceland, and we saw in Cyprus as well. That there've been these bail-ins where
Yes.
people have lost money
Yeah.
from the bond, and also we saw the collapse of, even recently last year, we saw the collapse of the Italian bank Monte dei Paschi di Siena, which shows that in Europe at least not enough has been taken, action has been taken to strengthen bank balance sheets and protect them from the non-performing loans.
So I think it took 2008. We are 2017 now.
Yes.
So you're about right. Take about a decade, right, to get back. Do you say that we are now healthy?
I don't think we're healthy. No, I think there's still a lot of built up latent sort of stagnation within the system. One of the things that we would have expected is that, or we would argue, is that there's a lot of money being pumped into the global economy, something around the region of $60 trillion. That $60 trillion has only really brought about $20 trillion of growth.
Is that right?
So there's around 40 trillion, give or take the odd trillion, that has not actually made it anywhere. So we don't know where that money is sitting and what it's doing. But that is one of the reasons why, apart from sort of Southeast Asia and China, which has seen sort of stronger growth, and India as well to an extent, the actual Western world has seen very low growth and slow growth. And so one of the things...
Well, I think Louis, very good introduction. Now we got a feel already what went wrong in 2008. I think we're going to take a short break. When we come back, we'll try to look a bit, where do we stand now? And the last session I want to see more, what does the future hold for us? And what are the lessons learned?
Lessons learned. Okay.
Good. Well,
Okay.
Well, Louis, we have a good background on the financial crisis. Take about 10 years to come back, be healthy, take the right medicine, Some took the right medicine, some didn't bother take the medicine. It's a metaphor, right?
Yes.
But all in all, what do you see we are now in the context of the global situation? I set the stage in the beginning, the reversal of this globalized movement, protectionism, that sort of thing. How do you see the banking sector worldwide? How do they feel? How do they perceive this whole thing?
Well, I think the ramifications of the financial crisis and the collapse of the banking system has brought us to the stage, and you touched on sort of protectionism and populism at the beginning, and I think that's really where we've got to, because just as we were finishing, I was saying that there's sort of what appears to be $40 trillion that's missing or not hasn't matriculated down to what I would call sort of the ordinary global economy. So it's trapped in the system somewhere. And what it feels like to us is that money has, if you've got assets, then you've been able to increase the size of your assets.
Yes.
So even if banks are giving you very low interest rates, and that is the byproduct of the global financial crisis, is that the interest rates in the Western world are very low. You get 0.5% or less than 1%. I mean, I know it's different in Asia. But inflation is higher here than it is over there. So from that perspective, is that if you're a saver, then where are you getting your growth from? You can't get it from cash on deposit.
Yes.
What was perceived and should be your safest asset. So you have to take on more risk.
Yes.
So you have to invest into capital markets, whether that's the bond market or the equity market. But we haven't. But if somebody is on a lowish wage and hasn't got capital to employ, then how can they ever get themselves out of that cycle or that trap? Whereas at least if you could put cash on deposit, you would get some return. For those who've got the wealth, then you can deploy it. You can buy property, and there's a lot of, you can, whether it's London rent, whether it's Manhattan rent, whether it's, invest in Asia in building property, equity markets. And one of the byproducts of the quantitative easing, this financial money supply, has been the rise of stock markets. You see, and so a byproduct has been that companies have seen capital, have seen cash. They're not using that cash in what we would expect in a normal market cycle. So they're not buying or renewing their plant, machinery, investing in infrastructure, that's also globally, and not really developing or increasing wages. So you have this disaffection of the main working individuals who have not necessarily seen a pay rise, feel that they're not able to move forwards, but those who are wealthier are getting wealthier. And this
The gap is getting
the
wider.
divergence has got greater and greater and greater, and it's culminated probably over the last 10 or 15 years. But there are cycles, but it does seem to be wider, and that's especially true in the US, but it's also true in the UK and globally. And there was some research done, I would discredit who it was, but I think it was from Morgan Stanley.
Okay.
But they produced a chart, and that chart is something that we use regularly when we're talking.
Okay.
And it shows that 0.1, that's 0.1%,
0.1
of the US holds the equivalent same wealth as the bottom 90%. So that's the top 0.1% has the same wealth as the bottom 90%.
In the US.
In the US. But it's not dissimilar in the UK. So there is a massive wealth gap. So if there is a wealth gap and I feel that I'm not able to grow as an individual because whilst inflation appears low, a lot of that is imported deflation because we have electronics which seem to get cheaper every year. We have cars which seem to stay the same price every year. But my bread and my milk and my general commodities are going up. So my cost of living, my real cost of living is increasing, but my net wage has stagnated, or in fact, in reality, has gone down because there is still inflation. So I'm getting left behind, and that's not just those on the poverty line. That is the sort of the hard-working middle classes as well. So what does that do? Well, it breeds disaffection. And here we start.
That's why the populism.
So this is where you get so this is where you get a populism movement. Now, what has been found and what we often find is that populist movements are very good at sort of throwing barbs and throwing comments from the sidelines. But once they're actually in power, they realise how hard it is to change the system.
Exactly.
So we saw that originally in Italy with the Five Star Party. And they've still not managed to change any of the system. But the real ramifications of this sort of rise in populism and to an extent that breeds protectionism is what's happened in America and the election of President Trump. So you
we don't know the election in France.
We don't know the election in France, but if we sort of actually even go before the election of President Trump, being a UK citizen, we saw the referendum in June 23rd last year.
The Brexit
vote.
So it has to do a lot with that?
Very much so. Very much so. So you have a disaffected populace who believe they're unable to change or do anything that they want to, unable to develop, and it's very easy to blame somebody or something.
But as a system, it's very difficult to change a system now.
It's almost impossible, and that is probably one of the reasons why there was the Brexit vote was always going to be close. Probably not as close as we thought, and most commentators felt that it would fall on the Remain side because the status quo is generally better, as we know. But people have decided that change is what is required, and if you can't change from within, then you have to come out. And so we saw that, and I think almost as a result of the referendum result, that gave the credence to Trump and to allow the US. But the reality of the US is that there also is a huge amount of disaffection in the
Yes,
US.
indeed.
And there was and again, I talk about that wealth gap.
Yes.
And so therefore this was a change against the system, not necessarily a change for something else.
Yes.
It was, we are now against
Yeah.
the system that's not working.
Well, to me, I find that, for politicians, of course, populism, they get them vote and everything, but retracting from global trade is not helping the global economy.
No.
Right? And particularly for smaller economy, for developing country who need access to this global supply chain, this global market access, and for consumer, we need cheaper product. And you cannot have cheaper product when product are made locally and for protection reasons.
Yes, I think the protection the conversation is I think it's like all rhetoric and populist rhetoric.
Yes.
Is that it sounds good when it's being said, but it's actually much harder to employ. But President Trump, not being a politician and being a business person,
Yes.
is actually saying what he wants to say and saying what he means. And that's quite refreshing in a way.
Yes.
We can argue whether it's good or bad, but
Say-
it is refreshing.
say what you want to say,
Say what you want to
and
say.
say what you mean.
Exactly.
Yeah.
As opposed to normal politicians who are very used to sort of
Yeah.
blending the truth, shall
Yes,
we say, if
yes,
we were going
yeah.
to be kind.
Yeah.
But his inaugural speech was very much about making America great again, making America rich again.
Yeah.
And again, research shows that the US is the world's richest country
Exactly.
and holds 42% of the world's wealth.
Yes.
So the reality is that America is rich already, but it's a good rhetoric to tell a disaffected
Yes.
population
Yes.
that we are going to regain control.
I'm pretty sure that most of the populists have no clue about this statistic that
Correct.
you mentioned about this is not 0.1 holding 90% of the same wealth, so 9% of people below. But I would say, America is rich already, but watch out, China is also catching up very fast as the second largest economy.
Yes.
And at the rate they grow 6-7%.
6.7.
They will catch up quite fast.
They will. I suppose, and I'm not really. I'm going to China next week, so it'd be
Okay.
interesting to see what's really happening on the ground.
Yes.
But a lot of the Chinese growth is predicated on increase in debt,
Okay.
and it's
What do you mean by that?
so. What you've got is had growth funded through. Most growth is funded by some form of loans.
Yes, yeah.
If we take that, but it's where is that loan coming from? Where is the banking system?
Okay.
And a lot of these loans are outside of the normal banking system. China's also seen the fastest build-up of debt, so the largest build-up of debt over the shortest period of time.
Okay.
So, yes, it's grown and it's grown substantially, and it was able to take the reins from the slowdown of the West. But at some stage, like all debt,
It's a lot of risk.
it's a lot of risk
Risk of
involved.
default.
Yeah.
Speaking of debt, have somebody done the analysis how good the debt, how bad the debt?
There are lots of people who've done the analysis. A lot of the debt is in what we call the shadow banking system in China. So it's at municipality level.
Okay.
It's not at the sort of
The central bank
central
level,
bank or
yeah.
Bank of China.
Yeah.
And therefore, we do have some concerns that the quality of debt may not be as good as it should be. However, I think there's been 2 credit defaults in the last 10 years in China.
Only 2.
I think so, something like that. So someone out there will pick me up on this, I'm sure.
Yeah.
But there is a very low default rate.
Okay.
And it seems to me that the debt is being issued with the thought process is that it doesn't really matter because it will be covered by the Bank of China or the central bank.
Okay.
So there is no what we would call natural capital destruction.
Okay.
There's no normal credit cycle. You need a default cycle, don't
Yes.
you? Because otherwise
Yes.
everyone just takes on debt.
And
without
Bank
any-
of China is big enough to step in, I guess.
Well, you would think so. But the Bank of China has its own issues. So if you're trying to stimulate your economy and you're trying to move from a domestic economy to an international economy, it's now
Yeah.
moving
Backward, yeah.
to a domestic economy. At the same time, it's trying to move from a economy that's based around sort of outside of town into town, moving across. So it's had to support that. How has it support that? It's been the largest buyer of US treasuries and US dollars, as we know. We've
Yes.
seen this.
Yes.
But it's also had to protect its currency to a degree.
Yes.
Because you don't want capital leaving.
Yes.
yet at the moment it's under strain. So one of President Trump's statements was that he was going to label China a currency manipulator.
During the election.
Yes.
I think the rhetoric sort of
stopped now.
You're right.
And we've done some analysis and looked at this, and actually what we've seen is that we saw significant outflows of capital from China over the last couple of years. So now we've seen controls put in place.
Yes.
But at the same time, we've seen the largest fall in FX reserves in China over the last couple of years, and that has been China effectively selling dollars that they inherit to prop up its currency.
Wow.
So it's been supportive of its currency really recently.
All right, that's great. It's quite exciting to see the giant, positioning, because we're a small country. ASEAN is getting to be recognized to be a region that carry weight now. But at the end of the day, we always, have to rely on the growth of our neighbor, growth of the rivalry of the superpower. We have to play that. Yeah. So I think we take another break, and when we come back, we can look a bit, what's in stock for the future. All right.
All right.
Louis, okay, we're coming to the last part of it, which I hated because we're just getting started. But what do you see now? What's in stock for us for the next 10 years? Taking into account the presidency of President Trump, the successful divorce of the Brexit. I don't know how long it would take, the divorce bill. And then the insecurity of the European. Many European countries are also going through election and everything, right? So what is your prediction?
You know what they say about economists is you always you have both hands and you get three answers.
Yes.
I think it's very hard to predict, and if one thing we've learned over the last 12 to 18 months is that one should never trust an opinion poll.
Okay.
Because we're never quite sure what's going to happen.
And that's why President Donald Trump got elected.
That's why exactly Donald Trump got elected. That's why the referendum result was seen to be a shock.
Yes.
Although there were those who very much argued that they saw it coming, and those who didn't. So, I think from that perspective, it's very hard to gauge what's going to happen over the next 10 years. It's really quite hard to gauge what's even going to happen over the next 12 months to 2 years, because the world seems to move at a much faster pace, and we are bombarded with information, and our job is to really cut through the noise and try and work out what is the real factors and what is really going to, as we would say, move the needle and filter it out. Exactly. And what's real and what's meaningful. And the reality is that whatever we think or predict might cause whatever the next event is, it's most likely to be something that we hadn't considered, because that's what experience tells us.
Yes.
So
self-fulfilled prophecy
can be sometimes. So I think there was quite a lot of different bits to that question.
Okay.
So I may forget one or two of them.
Break it down.
But let's start with America, because I think the reality is that whatever happens in America has the ramifications across the rest of the globe.
Clearly.
So we have President Trump, who has come in with a stated objective to change the status quo in the US. Not all of it is necessarily going to be beneficial for the Rust Belt or the workers that he talks about, but he is trying to change the system.
Yes.
However, at the moment, as we know, the system is fighting back, and he's not been able to execute some of the things that he's wanted to implement. What will happen there is that almost a binary situation, I think. He will either, at the end of his tenure, decide that I've had enough of this, I can't change it, I'm going back to run my empire. And bear in mind that he is a person who's repositioned himself as a man of the people, yet he's one of the wealthiest people.
Yes, exactly.
So
so is his cabinet.
And his cabinet, exactly. And his cabinet was very interesting, because we said at the beginning that the US banking system is fixed, and it looks like that most of his cabinet has come from Goldman Sachs. So we can understand why the banks are looking so strong.
Yes. Okay.
So therefore, if he can't change and he decides not to run, then we don't know really what the outcome is going to be. Alternative scenario would be that he stands up, repositions himself, goes for election and says, listen, this is what I wanted to do. The system is against me. Therefore, we need to change the system. And that's where we could see the largest groundswell of change if people start coming up for congressional elections, which are in the next 18 months or so, and saying, well, hey, you know, if it was you, Siphana, I'd say, hey, Siphana, you know, we voted for change. You've done the same thing every time. I'm not voting for you anymore, you know?
Yeah, that's it.
And that could be the biggest change. So there are implications there. If we move that across, then we'll go to, then you mentioned the Brexit and the referendum. Well, so we are, because obviously the UK has decided now to have an election, and that is a strengthening potentially of the hand of the current Prime Minister, Theresa May. And we would expect that she will win this election, but again, no one can predict, and get a stronger government and a larger majority. If that happens, then that will allow a stronger negotiating stance with the EU, because you'll have an elected representative of the people, as opposed to somebody who was put into that position. But we don't know what the outcome. We've got a timetable of 2 years for the referendum, but as you know, dealing with corporate law, trade agreements take a lot longer than that, and we might get some sort of headline detail, but we won't really get the full detail.
And the EU would not want to give a break.
And the EU is
it's a matter of precedent setting.
Absolutely, principle and precedent will not want to make it easy for the UK to exit and unwind. So we might get some heads of reference, but who knows really what's going to happen. And so we have two entrenched parties trying to find some arbitration in the middle. So more work for the lawyers. Which then takes us round to Europe, and you're absolutely right. And we've now got the French elections, which will be this Sunday. And for the first time in 60 years, you have two people standing for election who are not of them from the major parties. Exactly. I did say with the caveat that no one should trust what the opinion polls tell us. But after the debate yesterday, it does look like Macron has the edge over Le Pen.
And Obama come out to support Macron now.
Well, see, the thing is, perhaps slightly tongue-in-cheek, but Obama came over to support Remain in the UK, and that's...
Okay.
So, personally, I feel that Macron probably has the edge, but the one thing we know is that there's a lot of people who haven't actually admitted how they're going to vote. And we saw that in the referendum, that when you have a lot of people who are the unknown or undecided, they tend to be the ones who are going to vote for a party that are not necessarily comfortable saying out loud. So that could be a big move for Le Pen.
Yeah, because I think the outcome of the election will sort of like determine a bit the future stability of the EU as well. No?
It will indeed. We saw the Dutch elections, and that was a pro-European election. So it seems that the needle in Europe is very much to remain as part of the European Union, but there needs to be some change because the bureaucracy inside is stymieing growth. So if Macron wins, then that strengthens the hand of the CDU in Germany, which gives us a potentially better result for Angela Merkel. Which then actually, ironically, makes it even harder for the Brexit negotiations because you have a much stronger unified Europe. So that's sort of captured some of the politics.
But linked to the economic prospect, how do you see all that, shaping? And I'm looking from the perspective of Asia, ASEAN, where we are working quite hard to ensure political stability in the region, to ensure the economic growth, for the region, particularly for the smaller country of ASEAN, where we need to catch up with the more advanced ASEAN, right? And we need social growth. We need a strong EU. I think from our perspective, we look at the EU as a good partner who understand our culture. The EU has thousands of years of culture, so they can relate to the Asian culture, right? So we feel that we need a strong, unified Europe. Now that the instability of the US, the protectionism, that sort of thing, the killing of the TPP, I mean, let's be real. From a Cambodian perspective, we're happy that the TPP didn't take place because it helped us from our neighbor, Vietnam, who's a member of TPP. So now we more reassured that under the regional economic partnership regional comprehensive economic partnership trade negotiation, this mega trade negotiation, which include ASEAN 10 and the 6 other big country, we feel that we have a chance, right?
Yes.
But how do you see this intercontinental synergy or dynamics right there?
It's a very tricky one to call, if I'm being honest, from my perspective.
Yeah.
I think when you have this increased in protectionism,
Yes.
and sort of, if you're going to make your own country stronger and greater in the Western world, then that normally comes to the deficit of somewhere else.
Or somewhere else, yes.
So,
And so is in the US.
Exactly. And
Making America great will be at the detriment of somebody else.
So making America great again and bringing and making America wealthy again. Well, that's not making Americans wealthier again, because that's the distribution of capital.
Yes.
It's making America wealthy.
Yes.
So that will be to the detriment of the rest of the world. And that will have ramifications for trade partnerships, trade negotiations, and potential global growth because of this protectionism. For ASEAN especially, I think there is still a lot of capital that's coming around and looking for a good home. So perhaps that's where you'll see some of the growth coming through. I think one should never sort of preach to other countries, and I understand your point is very well made about looking for economic and political stability, and the Western world has been very strong at advocating that and is now in a period of significant economic and political instability. So we have to be careful. But I think if the growing nations of ASEAN can look at the best parts of how capital has been successful in the Western world and look at and avoid the pitfalls, because of course we had the '97 Asian crisis already. So this is very fresh in our memories.
That's a lesson learned.
A very good lesson learned, and to not allow the unchecked growth of debt. And I think that is a big issue, because a stronger dollar, which is what we're seeing and will probably see, if most debt in ASEAN is dollar denominated and the dollar gets stronger, then obviously the cost to repay your debt becomes harder, and we don't want to see another crisis coming as a result of that debt burden. So I think as a bloc, I think you're right to try and consolidate and negotiate, because it gives you more bargaining power. But at the same time, one should always be aware that there are pitfalls on that side of things as well.
Well, Louis, we're coming to the end of the program, and I'm not going to bother to summarize. All I'm saying is that I would say that's life is all about. Everything is cyclical. We just have to be mindful of that. And I think it's important for me, if there's something to draw from our short discussion, is that government need to be mindful of this risk. Government need to be very conscious on policy that they need to do in situation like this. How do you strengthen your domestic policy? How do you increase productivity? I mean, at the end of the day, the real economy matter. You have the financial economy, but the real economy matter. Smaller country like Cambodia, we have to be mindful. How do we increase our productivity? How do we, improve our education system? Because all this will be our cushion. One way or the other, people need to eat, people need to get employed, we need to compete, and hopefully it will sustain us, uplift, and survive, until the next stable period. So, Louis, I think, let me just say thank you for coming, and I really enjoyed the chat.
Lovely, thank you for inviting me. Pleasure.
Yes, thank you. Pleasure. All right, so we're coming to the end of the program, and like I say, it's too much of a wow effect. I'm not gonna bother summarizing. I can't summarize in a way. So I hope you learned something from the dialogue, and on that note, I want to wish you have a good night.